Welcome back, ladies and gentlemen, friends and foes alike. I hope you're feeling extra frosty out there today. This is Benny Digital here, Chief Furu Officer of Rigged AI. We are back with another episode of Zero DTE School. Today, we're going to be talking about how to trade using Rigged AI. Now remember, Rigged AI, the system is 100% proprietary, which means we built it from the ground up. This video is probably not useful if you're not a member, but you know what? We appreciate you watching anyway. So rule 1, if this is your first time trading Zero DTE, you don't need to fight. You need to chill the out. And all that means is this is the most volatile financial derivative ever created by man. There's nothing crazier than Zero DTE trading. You can be up 100% and down 30% in 2 candles. So if this is your first time, start small, start slow, or even better, use fake money or mommies and daddies. Okay, let's get into the blue line rule. The thin blue line, go police, yeah. The blue line is the open price. And what you need to remember at all times, 3 strikes up or 3 strikes down. 3 up or 3 down from the blue line. Just knowing this, whether you use Rigged AI or not, is going to save you and help you in your Zero DTE trading. Now I'm going to get into some examples of different days where you see the blue line rule come into full effect. All right, here we are, SPY, January 10th, 2024. Let's start by looking at the blue line. Where's the blue line? Where's the blue line? Right here, okay? We open at 474.14. The blue line is right here. Now the blue line rule, remember, 3 strikes up or 3 strikes down is typically what we see on an average trading day. Not every trading day is average. Obviously, every session can be unique, but this rule will save you, okay? So look what happens here. We're talking about the strikes going up, so we're looking at the red lines. We open basically at 474. We go up 1. We go up 2. And look what happens when we go up 3. 3 is right here. Let me get rid of these other ones. At 1500-ish, we hit 3 strikes up. We are 3 up from the blue line. What happens? Well, what always happens when we go 3 up or 3 down on an average day? You get a bear bomb that's perfectly tagged, 3 higher, and whoop, profit. Just like that, baby. Okay, 3 strike blue line rule. 3 up, 3 down, that's basically what you're going to see. We're on 12/29/2023, again looking at SPY. We open right here, 476.47. That's a little bit difficult to see. I'm going to have to yell at my mom, tell her to make it a little bit more clear going forward. But you're looking at this, and it's the same thing. Okay, 1, 2, and here is the first time when we tap 3 down, okay? So we're 3 down from the blue. It's like 11:30-ish. And you can see the movement. You know, there's a really brief attempt here to go higher, but we go a little bit lower. When you're looking for the reversal, 11:30 is pretty early in the session for it to happen. But look at what happens next here. I mean, this is perfect. What a setup. Right here, 12:30, we are 1, 2, 3 down from the blue line, and you get a bull bomb. I mean, this is a crazy one. Let's click on it and just see how much money we could have made if we traded this thing. Okay, pretend I clicked on it. Look at this bull swing. Look at this alert, man. Oh my goodness. The 473 call, what did it start at? 118? What did it end the day at? 270. I mean, you got 128.57% return if you just bought this alert and did nothing. Didn't even trade the rest of the day. Did nothing except let your broker sell it for you at the market close. I mean, that's not even far off from the max gain. And the reason why, we like this alert, we love this alert when it happens, because we're 3 down. 1, let's go. 1, 2, 3. Okay? And this isn't an exact science, right? Because we open here, it's not exactly at the strike. It's not perfect. Nothing in trading is perfect. This system is as close to perfect as it can be, but there are some things here and there. But 3 down, that's where you see the reversal. That is where you take this trade. Bam, baby. Okay, so we know the blue line rule says 3 strikes up or 3 strikes down on average. And now the second way we need to think about this is the higher we go from the blue line, the more risk it is for bull alerts. The lower we go from the blue line, the more risk there is for bears. And just think about this simply before we even get into the chart. If you are higher, 2, 3 strikes higher than the blue line, it's very rare for us to go 4, 5, or 6. So if you get a bull alert and it's 3 up, maybe we don't want to take it. Same thing goes for bears. If on average we only go 3 down, and this is pretty common for SPY and QQQ, you're 3 down. Do you really want to take the bear alert? Or is it possible we're going to see a reversal? Now let's just look at some of these and I'll show you. Higher, more risk for bulls. Lower, more risk for bears. Okay, we're on the QQQ January 1st, 2024. Open 396.41. What happens? 1, 2, 3. Okay, so we're up 3. And look at these bulls come in. Look at the bulls come in 3 up. This is a Wall Street trade, but Wall Street, they can be just as degenerate as we are sometimes. They might have missed this whole move up, and all of a sudden, they want to chase it. Maybe they should watch these videos and they would know. 3 up, violation of the blue line rule. So, look at this thing. Your max gain, 11%. Your max gain here, 0%. Why? Because there's more risk the higher you go. This is actually a perfect day because the strategy box here says mean reversion. And we'll get into, videos with different strategies here. But it worked perfectly. You go up 3 and it comes all the way back down 3. There's more risk for bulls the higher you go. And there's more risk for bears the lower you go. Now let's look at a bear bomb that got killed 3 down. Okay, here we are, SPY 12/24/2023. Open here, we go about 1 above the blue line, and look what happens when we go down, okay? This one right here, oh my gosh, at the blue, awesome trade. Max gain of, 535%, crazy. But what we have to remember is the average day is 3 down. So each one of these, the further down the bears go, becomes more risky, okay? So if we look at this alert here, you get a max gain of 165%, end of the session. But we get here, and we're like 2.5 down. Your max gain's 87.56%, which is still a great trade. But we have to understand, there's more risk the further down we go. And what happens? What happens when we get to 470? You know, the 470 is right here. That's 3 strikes down. Boom. The bulls come in. 3 strikes down. I mean, look at this thing. Let's get to 212%. Right? So maybe you trade this one. Maybe you trade this one. But when we know we're getting here, oh my goodness, there's more risk. Boom. 212%. What a trade. What a day. The blue line rule in perfect harmony, synchronicity, whatever the heck those things mean. The further down you get, the more risk for bears. The lower you get, the better it can be for bulls. Now, there are certain days where this does not work and will absolutely kill you. We'll talk about those next. Okay, I know I said that we were going to talk about when the blue line 3-strike rule absolutely kills you. We will get into that next. But first, if you're first starting out with 0DTE trading, you're new to rigged AI, you really want bulls below or bears above the blue line. And if you're looking at a bear up 3, a bull below 3, awesome, awesome trades. The hit rate on these is insane, as you've just seen from the examples that we walked through. Rewind the video, see them again. When you're first starting, you can't find a better alert or a better 0DTE trade. But yes, sometimes this will kill you. Let's get into that now. Okay, the blue line will absolutely kill you if you step in front of the train. Do not step in front of the train. RIP, Greg Plitt. Dude tried it. Look at those muscles here. He can't do it. You definitely can't do it. And simply what this rule means is when the market is moving and it's hawking up or it's nuking down, do not try and be early. This is when you're going to see constant price action in one direction or the other. There's going to be traders. There's going to be Wall Street lizards out there trying to hit the 3-strike rule. So we're going to be up 3 and you're going to see the bears come in. But this is just something you have to recognize. We'll go through examples of this on certain days. These days are rare. These are the days we wake up and pray for every day. Because hopefully you're on the right side and you're just following that move all the way up or all the way down. Let's get into it. All right, guys, look at this thing. January 8th, 2024 on SPY. We open right here, 468.39, and this is like a chart-breaking day. Because 69, 70, 71, 72, 73, closing at 74. I mean, just look at this thing. It just goes up the entire day. It's a pure hawk move. It's a train. This is not something you want to get in the way of. And look, you see it. What? 1, 2, 3. I mean, they try it. Okay? 0%. They go up 4. Oh my gosh, you got 22%. But the thing to recognize is we have to look at price action as well. Now, this is a crazy day. Most days are not like this. But look at all the bull alerts coming in. When the bulls outnumber the bears, and we can see that right down here, 18 to 13, we see Wall Street is selling the 470, 469, 471 puts, super bullish, and this thing it does not stop going up. I mean, you're buying this here, and you're still getting 5x at 13.59 because we close at a high. This is a trend-following, amazing, amazing day in the market, and I'm sure, let's check it out on the QQQ. QQQ, they didn't even try. I mean, they tried what? Was it 6 up, something like that? 15%. But again, we're looking at the price action. We're seeing here, oh my gosh, they're selling puts. What does that mean? What does that mean? It means we're going to go higher. Now, if you have a difficulty telling when the price action is just ripping like this, or when it's kind of like chopping and maybe coming back down from 3 or up from 3, go slow. Use that trust fund money. Use that paper trade account. Don't start with real money until you can tell the difference. And when you can, life-changing, baby. Okay, guys, let's summarize today's lesson in Zero DTE School. 3 strikes above or below the blue line, remember the blue line's the opening price for the day, is average. Most trading days are average. That's what we see. So the higher we get from the blue line, the more risk there is for bull alerts, and the lower equals more risk for bears. Because on average, we only go 3 higher or 3 lower. Sometimes it's even less than that. So if you're using the rigged AI system, it's 1142, you get a bull bomb, but you see that we're already up 3 strikes. Are you going to take it? You can. Free society, free world, do what you want. Sometimes it works, but there's more risk. There's more risk because 3 strikes above or below is average. And then the last part is to remember the only time this will not work and absolutely kill you is if we are in a hawk move up or we are in a nuke move down. And monitoring and seeing that type of price action is pretty easy to tell because you're going to get a ton of alerts one way or the other. If we're going up, you're going to get like 20 bull bombs. If we're going down, you're going to get 20 bear bombs. So we don't step in front of the train. We're not Greg Plitt. Even he couldn't survive. Summary, 3 strikes up or 3 strikes down, that's the average. Higher we go, more risk for bulls. The lower we go, the more risk for bears. Thank you for tuning in, and I hope this helps in your Zero DTE trading.